Welcome to the Big O Money Show. Andrew Galvin here, filling in for Bill Altman. Co-host Tony Shore, always with us.
Woohoo!
Tony.
Yeah. Good morning, Andrew Galvin. I'm so excited to be here with you. Yeah. Once in a while, I love Bill, but it's kind of fun, just you and I doing the show together.
I love jumping in on this. It's just it's a lot of fun talking to people on the radio, hanging out with you, Tony. And yeah, I'm excited. So how's everything been?
Everything's good. I know how busy you've been. You've been meeting with so many people. I know you love hearing from our listeners and viewers out there. And Andrew, you've been helping so many people develop their retirement income plans, their overall financial plans. And that includes everything from healthcare to what are we going to do about inflation? How are you going to handle that and tackle that, to what's happening with the markets? And you guys stay on top of all that. So I can't even fathom how busy you've been. That's why I'm glad you were able to make time to do the show today. Absolutely. I've been great. I'm still riding a high from the U.S. men's and women's hockey victories, beating Canada. Woohoo! Right?
I know. Yeah. And what was it? Was it almost 40 years to the day for the men?
Yeah. I think it was actually 46 years.
46. Okay.
Yeah. 1980, the Miracle on Ice. So
that's right.
46 years. Yeah. Yeah. That's incredible. And Canada was definitely favored. I don't know if you saw any of the game, but I've never seen such intense, high energy skating. And I've been to a lot of professional hockey games up in Minnesota, my Minnesota Wild. I've been to a lot of Wild games. Yeah. I have never, ever in my life. My wife said, we've been to professional hockey games. They don't move this. They're not skating this fast, or they're not this high energy the entire time. Right. I mean, there's bursts, but the entire game was just like, it was like they sped up the game or something.
Yeah. Yeah. Well, it's funny because I did not catch any of the first three periods, but when
you didn't get up at 7 a.m. to watch the game on Sunday morning.
I did not, but I got up about 9 and I was like, oh yeah, the men's hockey game's on. So I turned it on my phone, and I had just turned it on for that last sequence in overtime where they scored.
Awesome.
So I was just like, oh my gosh, we just won the game.
Yeah. Huge. I will tell you a quick funny story, and then we'll jump into, I know we got to get going, but I was actually talking to another advisor up in Mora, Minnesota, and he has a radio show up there. He's a great guy. Reminds me a lot of Bill. Great guy. A little older, but he's been doing it a long time. He runs sound for his church.
Okay.
And he said, I had to be in church running sound Sunday morning, and we have an early service. And he goes, yeah, I was running sound, but I wanted to see the game. So I had the game on my phone because I'm in the back, kind of sitting elevated with the soundboard, and I'm watching the game. And the crowd, those who knew me, saw that I had my phone, and they would turn around during the service, and I kept flashing 1-1. It was 0-1, 1-1. And I'm like, wait, you were watching the hockey game during church? Yeah. Can you imagine? And he's just telling this story matter-of-factly, like, no, but it's just like, and I go, the poor pastor, and he goes, well, actually, we had a guest pastor. Yeah. And then when I said, I kept going, we won. When we won, I went, we won. And silently, and the whole crowd turns, and some people were raising their hands and waving during the sermon. And afterwards, the pastor said, what was going on there? And I said, the hockey game.
Yeah.
That poor guy. I mean, in church. Yeah. And I'm like, well, Jesus was at the hockey game on the U.S. bench. So it's not like Jesus didn't have a problem with it. He wasn't at church. He was at the hockey game. That's what I said. That's bad, I know. But seriously, that was funny. How about you? I know you've been busy, right? That's the bottom line.
Yeah. Yeah, we've been cranking here at the Premier Group, and obviously the start of the year, you have the first couple weeks where you're just kind of getting into it, right? And then tax season hits, and we've been dealing with taxes for individuals. Obviously, Julie's been great with that.
Yeah.
I think it's going to be a record year as far as she's concerned. And then kind of helping clients with beginning of the year planning. And, the other thing that we've kind of been seeing is the market this year has been a little bit all over the place.
Yeah.
And clients have questions about that. And so, Tony, I think today, what I really want to focus on, outside of celebrating men's and women's hockey, is to kind of refocus, right, on the financial picture and planning for that. Because for the last several years, basically since the lows in 2022, the market's up 75, 80%.
It's crazy.
So if you just put your money in an index and you let it ride that wave up, you probably had a great 3 years, right?
Yeah. Yeah.
And I don't think anybody would disagree that the market has been amazing. And now we're kind of hitting this, Dow's between 49 and 50, S&P's between 67 to 69, maybe a little bit over 69. And then it just kind of seems to drop back a little bit. So we're hitting, if you're just broadly based indexing a lot of your retirement funds or your investments, you're kind of like, what's going on? Things don't seem like they're moving quite like they have been these past couple of years. And then we had a situation last week, Supreme Court struck down some tariffs, so I think there's just a lot of noise. There's a lot of things happening right now, Tony. But I think it's always at these points where you want to go back to thinking about making sure you've got diversification. Are you fully indexed to the S&P 500, or do you have everything in one or two ETFs and calling it a day? That may have worked well for the last 3 years, but maybe it's time to look at making a change, understanding what your risk tolerance is, and then diversifying outside of those one or two positions. And then what sectors right now are actually performing, because maybe the major indices aren't moving up like they have been in the past. But one of the other things that we're seeing is we've got a broadening out of this market right now. I mean, small mid cap has been well positioned this year. Some international has been doing pretty well. And there's some different pieces that play into that, and I'm not going to get that technical on everybody, but basically to say diversification is back, from what we've seen relative to these past couple of years, where you could just buy Nvidia, Apple, Google, and call it it.
Right.
So
I wouldn't want to, and the problem is people see, oh man, things have been riding high for 3 years. I'm going to buy more Nvidia, or I want to get more into the Magnificent Seven. The problem with doing that is you're buying high.
Yep.
You don't want to do that. And a lot of the talking heads out there are saying things are probably going to level out this year. A lot of the wise minds, are saying we might see a broadening, and less of the Magnificent Seven carrying. We're seeing AI broaden out into other companies as well, joining the AI race. So it is probably a good time to reevaluate and refocus, because there is a lot of noise out there, though. And of course, if you watch the 24-hour news cycle, it's always the sky is falling. It's always negative, right?
Yeah. AI is coming for everyone's jobs, unless you're a construction worker, at which point, they haven't quite made it there yet. Yeah. China's got robots, and, then that's a whole nother conversation. But, if you take a step back and look at what's actually going on, Tony, I think you see that there are still opportunities out there. I think you see that there are still individuals that are making money in this market, and it's just about being well positioned, addressing the diversification issue, like I said, and then, making sure that we're not putting too much risk into your portfolio in times like this. Because if you have a lot of volatility, all you're going to see is that line kind of bouncing up and down.
But you're going to have days where it's way down and you're going to panic, and you're going to have days where it goes back up, and you don't want to have to try to time the market. So you're talking about, to avoid that, rebalance a bit. And now is the time. When you say diversify, you're talking about rebalancing, right? Like maybe some in rebalancing from, okay, how much do I have in precious metals? How much do I have in the Magnificent Seven or the
Yes.
S&P or tech stocks? And how much do I have in bonds? Or how much do I have in my emergency fund and cash reserves? So you have to look at all that, don't you, and see, but everybody's situation is different. You're not giving specific advice because the individual out there, their time horizon and goals and when they are going to retire and when they're going to need their money might be completely different than the next person's.
Exactly. And so, for current clients, we can just sit down and say, hey, here's what's going on. Here's some things to think about. Here's some places to maybe look at for rebalancing. But then for an individual that says, well, I've only ever been in a couple ETFs and that's what my whole investment strategy has been up to this point. Maybe it's time to look at creating a retirement income plan. Maybe it's time to look at working with a professional or just even sitting down and having a conversation. So one of the things we do here, Tony, and I think Bill's talks about it just about every week, complimentary, no cost consultation here with us at the Premier Group. Give us a ring if you feel like that's something you'd want to take advantage of. 402-557-6730. You can get on my calendar. You can get on Bill's calendar. Justine will be happy to assist you with that. It's really just about meeting individuals wherever they're at and creating something that's totally just for them, right? Because it's not a one size fits all. It's not 2 or 3 ETFs and we call it a day. I also think this is a market where a little bit more active style of portfolio management, and obviously Gradient has done a tremendous job with portfolios for us, for our clients. I think that's going to be something that through this year is going to be very attractive. And it already has been.
Yeah, it's already made a big difference for a lot of people. And I've seen examples of their active management saving people a lot of money.
Yep.
I know that Mike Binger, the president of Gradient Investments, who are the active managers of most of your clients' accounts. And so with the precious metals, silver was at an all-time high, just went through the roof. And he went over to Lisa Schreiber, the portfolio manager who's in charge of that, and said, hey, we've been looking at this, talking about this all week. Let's ease up on the silver. And I believe that week it dropped like 30%.
Yeah.
And they reallocated it into they reallocated it and it went up. Now gold has dropped, but then went back up. But you have to be careful with things like precious metals. You have to have active management. Because there was a 10-year period where gold
did
nothing or went down. So you can't just, gold, I hear it's doing well, buy. And that's why people, again, end up buying high and selling low, the opposite of what they need to do. It's why the Oracle of Omaha himself, considered the greatest investment mind ever, Warren Buffett, says, it's time in the market, not timing the market. It's active management. It's working with people who know what they're doing. And the unique situation you and Bill are in, you can pick up the phone and talk to the portfolio managers directly. You can even put them on speakerphone with your clients if they come in. And so for our listeners out there, I know you love to get questions and comments from listeners. And if they have a question or comment, I say, pick up the phone, give Andrew a call. Just ask for Andrew Galvin. Tell him you heard about it on the show. And again, that number is 402-557-6730. You've got a great team there at Premier Advisory Group. So, but I like the show theme today, a financial refocus, tune out the noise. That's so important. People get political. People hear about possible war with Iran. People see news stories on gold is the way to go. And the
gold IRA.
Yeah, the gold IRA. Yes, exactly. Right.
But and I'm glad you bring up the politics of it all too, Tony, because I don't want to get political, but sometimes I think people get into their bubble. And I don't care if it's Republican, I don't care if it's Democrat, I don't care really who it is or what you listen to. If you just spend all day listening to the 24-hour news cycle, you're going to come away from that and think, gosh, should I just put my money under my mattress? I mean,
Right.
all of these issues, right?
Because the sky is always falling. That's how they sell ads. I mean,
Yeah.
we all know this, but yet it's easy to get sucked up into it, and you don't want to be totally negative. And there's nothing wrong with being political. I like it when people are politically active
Yeah.
and stand up for their beliefs. But when it comes to your finances, we're talking about a separation here.
Yeah.
It's the separation of finances and state.
Yep. Yeah.
That's what, right?
I tell clients we put on horse blinders, and I'm not saying that finances are immune to, the tariffs or how they're going to be regulated.
Oh, sure. Somebody sneezes in China and it affects the stock market.
Exactly.
But it's a blip in the overall, the 20 years your money is going to be in there, or 50 years your money's going to be in there. It's
exactly.
Yeah.
And it was really funny because if you remember almost a year to this time, last year in 2025, when it was Liberation Day, the market plunged by 10 or 15%.
Yeah, it was down almost 19% in some markets, and stocks were down almost 20 because in April of last year because of the enactment of the tariffs. And of course that was a blip, and then a month later or 2 months later, record highs. And for 3 years, record highs. So yeah.
And now, I mean, did the market move at all when the Supreme Court came and struck down the tariffs? I mean, it really didn't.
It's really, I mean, we've had days where they're like, oh, market's down, and whoa, market's up. It's really, if you look at it across the board so far this year, it's pretty even.
Yeah.
I mean, if you average it out, it's really, yeah.
But again, so then we talk about the diversification, because there are some sectors like international's been decent this year.
Very hot right now.
Value stocks have been decent. And I'm not saying that, hey, you should go buy value stocks, Tony. I don't want to tune in and hear me say, just be like, well, Andrew on the radio said.
We're just saying what's been happening, and your situation may lend itself to that, but you want to have the portfolio managers and the senior portfolio manager, Keith Gangle over at Gradient, take a look at it. And have Andrew take a look at it, and Bill there, the team, and then make a decision based on your situation, based on math. And they know what's happening. They're actively managing that money. I think that's really smart, though. But don't make rash decisions, right? Gold's up, I'm going to put all my money in gold, or the market's going down, I think it's going down, I'm going to move to cash. I know people who in April of last year, the market started, when it hit like 12% down, 15% down, they moved to cash, and they missed the upside. Because a month later it was a record high, and they missed that swing.
And that's always the timing the market question that we ask individuals. It's like, okay, so you want to go to cash. So my question for you is, what's our buy signal? And they don't have an answer for me. And I say, I don't have an answer for you either, by the way, because I don't hold the crystal ball. Right. Bill Altman doesn't hold a crystal ball. Jake here doesn't hold a crystal ball. I mean, even the portfolio managers at Gradient don't necessarily hold that crystal ball, right?
Nope, they don't.
But you know that you have to stay invested. You have to stay in the game. That's what Bill always says. Stay in the game, because you don't know what's going to happen.
Right.
I mean, you encounter a setback. Do you stop? Do you just, pick up your ball and go home? I mean, maybe, but that's probably not a good idea, right? Because you don't know if the next thing you're going to try is going to actually work well for you.
Right.
So it's the same thing with investing. Life is like investing. Investing is like life. I think Belsky says that, doesn't he?
Yeah, Brian Belsky. Yeah, former chief financial strategist for BMO Bank.
Yeah.
Now on Wall Street, running his own private equity firm. And
and he's partnered with Gradient on a small mid-cap portfolio now.
Yeah, he was here in our office doing interviews last week. With people, and filming some spots and hanging out. He's been at the Gradient investment offices a lot lately. And so
we hear from him, I think, every single year at one of the meetings that we go to.
Yeah.
And it's always super interesting to hear him talk, because you can tell he has the experience, right?
Yeah, he is on Wall Street. I mean, that he is in the thick of it. He's always on CNBC, Fox Business, Bloomberg, all the time, and he's one of the experts that they call on. So he's involved with funds at Gradient Investments, and when you have access to that, which is fantastic for your clients.
Yeah.
But I think a lot of people, if you're in your working years and the market, like you have in April, if you see the market's going down, 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 that's actually a time to buy, not
Yeah.
sell. If you're in your working years or are contributing to the market, that's a good thing.
Yeah.
If you're in retirement, you might get you get worried if there's a down year, like 2022 was a down year, but then we had 3 up years. So you don't want to have panic and worry about that every time the market goes up or down. And that's why having a plan, you hope for the best, but you plan for the worst. And that's what the plan does. It allows you to sleep well at night. And so when it comes to tuning out the noise or financially refocusing, you should do that at least once a year. And you should always work with a trusted financial services professional to do that, right?
Yeah. Yeah. Cause I mean, we want to see you at least once a year if you're a client,
Yeah.
And so if it's something where you have questions more than once a year, that's fine. We are happy to meet with you more than once a year because let's be honest, 12 months, a lot can happen in 12 months.
Yeah. A lot personally can happen. I mean, family issues, there's births, deaths, marriages, divorces, the stock market can change, the climate can change, a lot of things can change, the financial climate, and the economic climate. So you want to review where you're at and your personal situation. Your risk tolerance can even change over time, and that's important.
It does for most people. If you think about it, I'm 35, 36 now, I guess, just had a birthday. And
happy birthday, by the way.
Yeah, thanks, Tony.
You don't look a day over 35.
Yeah, I appreciate that. But so my risk tolerance is a lot different than Tony, maybe your risk tolerance or one of our clients' risk tolerance. But I'll tell you what, as I age, do I want to be taking as much risk as I get? Like if I'm 65, 30 years from now, am I going to be taking the same risks that I am now?
Right. If you're Bill Kaiser's age, you don't want to take that kind of risk.
No, once in the great Kaiser, he's,
once you hit 65, that's
no, yeah.
I'm razzing.
But it's a true statement, right?
Yeah.
And people know that. But again, all this is so common sense. But the goal of today is to just tell people that let's take a step back and talk about the common sense things. Because you're not going to hear the common sense if you listen to the noise, right? You're not going to hear the common sense if you listen to the news cycle, the radio, the papers. Go outside, take a few deep breaths, touch some grass. It's supposed to be really nice here over the next couple days, and then we're supposed to get some snow, Tony. Probably same with Minnesota. But during those time periods, it's good to just have that reset.
Yeah.
And it shows you that there are things that are happening outside of the negativity, right? And then you come back and you have a whole different perspective on even the negativity. It doesn't impact you quite as much, right? And so that's where we want to be. We want to partner with you to remind you of those things and then to create that custom plan for you. And then as we walk through retirement or through life with you, our goal is to provide an anchor for you in order to realize what it is that's important to you. So again, if you'd like to create a custom plan, call us, no cost, complimentary consultation, 402-557-6730.
All right. That's great. Thank you so much, Andrew. Listeners, viewers, please pick up the phone. Give Andrew a call, 402-557-6730, and set up that no charge, no obligation consultation. Great show today. Thank you, listeners and viewers, for tuning in. That does it for today's episode of the Big O Money Show with our host, Andrew Galvin.